Hi everybody, this is Trevor with Market Delta, and I want to welcome Trader Don and Trader Bonnie today for this special webinar, 6 Reasons to Trade the Treasury Note Instead of the ES. This is our first webinar with them, and it's really a two-part series. Today's is really on the Treasury Note, and then we have one a week from today, which you can register at our blog. That's going to talk a little more about trading the ES as well as crude oil. So I want to welcome them, and if we should go for about an hour today, hold all questions till the end. There'll be a short period of time for questions, and then I'll wrap up right near the end. And it is being recorded. You will receive a link to the recording tomorrow. I'll probably say that near the end as well. So with that said, Don, go ahead and take over.
Thanks, Trevor. This is Trader Don. I started trading individual stocks about 1987, 1988. This was way back in the old days. Then in the mid-90s, I met a high school buddy. He was trading cattle and hog futures. And I'd go down to his office and watch the weather reports and trade cattle, and I thought that was pretty interesting and stuff. So in 1994, I went to Chicago. I took a class on trading, and the instructor, he trained us on how to trade the pivot strategy. I was hooked. He basically showed us how to trade it on the weekend. We went in and traded his own personal account Monday, Tuesday, Wednesday, Thursday, Friday. It was profitable, and like I say, I was hooked. So who are we? We're Globex Trading 24.5. Primary emphasis is trading the Globex session and the U.S. pit sessions. We do things a little bit differently. We're traders. We're a group of traders that have been together in excess of 5 years. Bonnie and I have been together over 5 years. Some of us in the group of traders we're with have been together for well over 10 years. We work together. We find trades together. We trade together. It's not just the moderator in our room speaking. When you hear our room, you will hear a moderator talking about the trades, but it's not just myself. If I'm the moderator, it's a group of traders that are feeding me information. We're looking at different markets. We're looking at different strategies. We have basically 7 type trades, and we're working together as a group. Our whole philosophy is that the strength of the pack is in the wolves, and the strength of the wolves is in the pack. We've been doing this for well over 5 years. We found that being a lone wolf and doing this by himself is very difficult. It's much easier to do it as a group. Now, let's get into the meat of what we really do. Let's just jump right in there and look at last Friday's employment report trades. This was a Market Delta 1-minute market profile chart for Friday, June 3rd. This was last Friday, the regular trading hour session. And you see that the initial balance was the blue bar here, and this was the price distribution that took place in that. On that day, the Treasury Note traded a 46/64 range. Treasury Notes trade in 64s. That was equivalent to $718.75 of range per one contract. In comparison, the ES S&P 500 Mini traded in the range on Friday from 1309s to 1295.50s. That was a 13.5 point range. Multiply that by $50 per point, and you have $675 per one contract. A lot of people will tell you, well, there's not much activity that goes on over in the Treasury Note pit, Treasury bond pit, but here's an example last Friday where you had a little bit more range dollar-wise than you did in the ES S&P 500 Mini. Now let's look at some trades specifically that happened over there. Treasury Note regular trading hours, pit session opens at 7:20. This is important to you as a trader because how many economic reports come out at 7:30? You know, there's a bunch. The Treasury Note regular trading hours is open the ES pit session is not, nor is the U.S. stock market, which that is based upon. So we kind of get an early start over in the Treasury note and bond pit on having an active market when the news hits. The economic report hit at 7:30. You can see what happened. Naturally, everybody is always excited. We want to catch this move to the upside when the market goes far into the upside. And gosh, if I'd just been on that trade. Well, as we know, we don't always have to be on that trade. We can get the pullback trade. And in this particular case, I used the market delta charting package, set up a 1-minute profile. If you know anything about market profile, you know that there's something called developing value. This is the developing value off the market delta chart. This is the market profile developing low. This is these little green dots are a quickly moving developing low. This is the developing high up here. Well, we know that anytime you get a major momentum move, that your first pullback is usually to this developing value high. We got an 8-tick pullback off the high that we made up here, came back down to this rising developing value, and an entry was very easily doable here in the 123.18s. Market then continued moving on to the upside, put in a new high up here at 123.26s, which, by the way, that was last Friday. We just went to that level again today, and we'll have more trades that we show you on the Treasury note and bond today with that. But that held through last Friday. We just took it out again today. Market comes back off, comes back down, and we have a little move back down below the developing value on Friday in the Treasury note. And each one of these ticks, by the way, is just a little bit over $15. More on that later. We come back off the developing value. We move back down. We move back down below developing value low. This is our first time back below developing value low right here. Let's say you bought this here, which I usually do. Anytime you have a rising developing value low, I'll buy that. As you see, that trade didn't work out. I had a losing trade. Our idea is to show you some losing trades here today, as well as some winning trades. That trade I got into at 123.20s. It went down. I was able to see that it went down, and I got out, took remedial action, took a loss. Came up here, came back down, and then started doing business below the developing value low. Started doing business below it. And we got a break back to the downside. We got a break back to the downside, and we kept on moving down, down, and gosh, Bonnie, we got clear back here to where we started at the start of the day.
Well, what do you think about that, Don? The criminal usually returns to the scene of the crime. Happened again today, as a matter of fact, but we'll show that later on.
Okay, so as Bonnie suggested there, many times these economic reports will come out. They will create some nice little action, and if you've been around the trading game for a while, now you know the real reason why these things return, because the criminal, as Bonnie says, always returns to the scene of the crime, usually. Now, I've been accused of being something called blue-collar Bubba, okay? Basically, I have a blue-collar approach to trading. When I trade, I just have tried basically to get good at certain trades, just keep doing them over and over and over. I like to make money every day, so I look upon my trading as basically blue-collar work. That's what each of us in the room also looks at it as. I have a trading room that's set up outside my home. I actually do pack a lunchbox each morning. I take it to work with me. I have a workbench set up that's got computers, phones, monitors, and I approach it as a blue-collar job. I work on certain trades all day long. I just keep doing them over and over and over again. At the end of each day, I review my work. I calculate out an hourly wage rate that I earn for the day's activity. And by the way, my work hours vary depending on scheduled news events, but I'll generally clock in about 7 a.m. Central Standard Time to get ready for that 7:30 news event. Our room and everybody breaks around 10 to 11 o'clock Central Standard Time when Europe closes and their volume goes away. I think if you're a seasoned trader, you know that a lot of times mid-morning the activity kind of breaks. The good trades are early in the morning, folks. You know that. Don't try to play catch-up by doing it over the lunch hour. It's not that easy. I especially like trading the last hour and a half of the ES and crude oil futures. There's some very good trades that show up as we get down to people having to close out their positions and either caught long or short at the end of the day. Now, I'd like to go over something with you before we get into some more of these basic trades. By the way, this is the Treasury bond. This is the Treasury bond 1-minute market delta profile chart. This also happened on Friday also too. I want to review it with you. 7:20, we got the 7:20, 7:30 news. We got the 7:30 news on to the upside. We came on up. We got above the developing value high. We came back up into and found resistance right at developing value high. This was an interesting pattern here in the Treasury bond because we came right up to a declining developing value high. And the nice thing about market delta, let me give you a little pitch here why I've been using them for over 6 years. I've been a market delta subscriber for over 6 years. You know, this is really great. We see this bar chart, we see this developing value, but how the heck do you know to get on this trade? How do you really know that this is a good trade to get on to? Well, Trevor's got something called the footprints. And the footprints just is an immense help to me. Not too many other charting packages have this. But right up here as this is happening, let's take a look at my next slide here. And I want you to see exactly what's happening on the footprints, specifically in this area right here. This is the footprints up here. These footprints are basically this area right here. See this area that I'm looking at? This is the footprints up here that I saw right at that time. What kind of volume is going off up here on these high prints? These are 1-minute prints up here. These are 1-minute prints down here. You're seeing one contract trade at the high, 2 contracts, 52, 1, 4, 2, 5. Wow, 932. 100. Then all of a sudden, look what happens right here at these 3 points. We have 937 sellers come into the market versus 478 on the buyers. We have 1,260 sellers come in versus 441 on the buyers. And the market starts to move down. This is the transparency that we see in the Treasury note and the Treasury bond market. These large size orders come in, this large size volume comes in, and it's very easy to distinguish because they don't hide them like they do over in the ES and various other trading pits. What you see is what you get right here. You see the failure. You see the high volume come in trying to push it higher. They lose it. Then the sellers come in and drive us to the downside. This is the advantage of market delta. This is why I've been using it for 6 years, this footprint chart.
And we're going to get into a lot more charts as we go along. Just wanted to say this is just a little bit of a explanation of some of the reasons that we're going to be showing you today why the 10-year note and the 30-year bond is something for you traders to consider. Now, I think it was advertised that it was 4 reasons why to trade the financials or the treasuries versus the ES. We've come up with 6, and if we kept thinking, we might come up with more. So the slide that you have in front of you is primarily showing the ES versus the Treasury note, the ZN. And what you want to see there is the ES, as all you ES traders know, is $12.50 a tick. With the Treasury note, Don has already told you what kind of range we can get with that Treasury note, and it trends very nicely. We get 15.625 per tick. Now, with any business, watching your expenses and watching your costs is extremely important. Also watching your margins. So if you could increase your margin by 25%, which is the difference between what the ES will pay you per tick and what the note, would you think that might be something to consider? As a businessman, I think, or businesswoman trader, you might want to consider that. Next slide, please, Don. Now, my background is accounting, so that's why I'm taking these, to show you a little bit more about the costs. Here, we're going to talk about expenses. Now, I don't know how many of you are with Interactive Brokers, but for me, a round trip in the ES is $4.02. In the note, it's $2.86 for one lot. So, if you trade the note, you're reducing your ticket cost by 28.8%. Now, if you next slide for me, Don. Here's another example with TradeStation. With TradeStation, round trip $4.72. The note is $3.44. Again, that cost is a 28% reduction in cost. Now let's just say you average a 10 round trip day, which would equate to commissions of, in the ES, if you're with TradeStation, $944 and $688 if you were trading the note. If you take that all the way to the bottom line at the end of the year, that would give you an additional $3,072. I think that would get somebody on a cruise ship. Next.
Bonnie, this is a chart that I just wanted to give you another good reason why. Bonnie and I are going to give you another good reason why. This is the 1040. This is when Europe closes on May 27, 2011. This is pretty common. This shows the mid-morning volume totals for both the Treasury note and the ES Mini. As you see, the ES Mini at this time has traded 874,000 contracts. At the same time, we had been just a hair over 1 million contracts in the Treasury note. Treasury note is very liquid. It has just as good as, if not better, liquidity than the ES. That's another good reason to look real strongly at trading the Treasury note.
All right, and this one is very similar to what you were talking about, Don, just a little different perspective. This is basically 2 domes that I have set up, and to demonstrate that at 9:30 Central, the markets were open. Both of them were, the cash markets were open. And you can see by the depth of market, which I have circled in the red there, on the left is the 10-year note, and you can see the depth of market is approximately 29,000. So access to liquidity is so much more in the note. And I see this all day long. This isn't just one isolated time. And on the right-hand side, you see the ES, and you'll see that we've got between 15 and 19,000 on the bid and the ask side there. So you just have a lot more ability to get your fills, and Don's going to go over that in a little bit, but you've got a lot more volume. The note is literally the second most liquid futures market in the United States, and it's a market that newcomers to the trading industry do not go to because they don't quite understand it. But it is an extremely nice product to trade and isn't subjected to what newcomers get subjected to in the ES. I'll leave it at that. Next slide, Don.
If you've ever been to the Chicago Board of Trade Mercantile Exchange website, 10-year Treasury note. This is another reason why I really like to trade the 10-year Treasury note. Trading hours of the open outcry Monday through Friday, 7:20 to 2 p.m. Okay, when's the ES close? Closes Central Standard Time at 3:15. At 2 o'clock, let's say you're a golfer. Let's say you like to ride your Harley like I do. Well, gosh, we can get out there and shut down and start leaving earlier in the morning, leaving earlier in the afternoon. The Treasury note closes earlier, so you can head to the golf course earlier. That's a very important consideration. This is what we call an unfinished auction. This is another feature of the Treasury note and the Treasury bond, which we find to be kind of neat. As a trader in the ES, I'm sure you'd always like to, that bid and ask spread that you see on there, that one that we're talking about, it's 5 1/4 bid, 5 1/2 offered. There's a tick spread between the bid and the ask. Over in the Treasury bond, in the Treasury notes, you will find this happening quite a bit. You'll have the market come down and you will be able to execute a buy at the bid side. You will be able to sell at the offer side. This is not just something that, many times I'll be able to put in a limit order and be able to execute at the better tick. If you can save yourself a tick, on the entry and a tick on the exit.
We'll talk slower.
Okay? If you can save a tick on the entry, a tick on the exit, that's a tick or two a trade. At the end of the day, you've got 5 trades, that's 10 ticks. This is a very important consideration, and one of the reasons why you should consider trading the Treasury note versus the Treasury note or bond, the financials, versus the ES.
Now, believe it or not, we're down to a 6th reason, and again, like I said, I believe Don and I could come up with a few more. But on this particular chart, or this slide here, I circled the offer of 3,196, and then there's another one right underneath that, a block order that came through at 1,738. What I want to say with this is I've been watching time and sales, and that's what you're looking at, a time and sales slide. And I've been watching time and sales for years. And I've never, and especially since the high-frequency trading has taken place, you never see these large numbers come through. What this does for me is it allows me to mark on my chart or wherever on my trader's log that somebody very important put a block order of 3,196 at 123.07 evens at 10:13 in the morning Eastern Time. That's an important number in time, and that to me is a point of interest. Do they defend it, or were they getting out of a position? Next slide, please. Again, here's some examples of the size of orders that you will not see in the ES. 2,697, 2,294, 1,198. These are extremely important levels that, as we look at on our footprint chart, that gives us an awful lot of information. And as we look at our profile, that gives us large volume information. But this is just one little additional asset that you can have in your bag of tricks in the note that you just don't get in the ES. Next slide. Now we're going to go into some more charts and exactly what we trade. And here is an example of the 10-year note. And what we had is a move down, and what you're seeing there is those dark green blocks. Those blocks are what we call our VWAP, value weighted average price. And with that, we also had a few things here, and the footprint chart is just such an asset to be able to use, because of course we have a level, but you're never quite sure if it's going to hold. The footprint chart gives you that edge, another tool that we love about Market Delta. Here we had our IB high, which is an important level that we watch. It coincided with the Globex high. Then market came down, came back up to that specific VWAP designation that we use, and you can see the gray area behind this specific chart definition that we use, and that's the developing value low. Now, Trader Don was talking earlier about developing value areas and how they look like on the market profile chart, and this is how it looks like on the footprint chart. The first time up to VWAP on this specific 5-minute chart, you can see there were buyers and sellers. In fact, there were quite a few buyers, 2,312 if you can see that. Now, if you were just to hold off a little bit, you would see that we had what we often call in our room, our wolf, we call it the wolf den. We had deceleration of 141. So the sellers, the buyers of that market at that point were showing that they were drying up. There was no more demand. The auction process was done. You have a lot safer entry when you take this entry. We call this a 4-star entry because we had 4 reasons to take this trade. With the deceleration, it gave us the bonus. So with that, we're staying with the trend. You can see the delta day at the top of the chart. We're staying with the trend. We're staying in a declining market, and the market came back and tested the IB low, which again is another big part of our trading strategy here. And if you do have any questions, you can type them in. We'll try to get to them at the end if there's time allowing. Next chart, please, Don. Here's another deceleration, and it ties with, doesn't tie with the IB, but it still shows you that our proprietary VWAP settings are very helpful in that we had a downward moving market that's coming out of Globex, and the market opened up, and where do you get on the trade if you're on in cash? Well, there's 2 areas you can get on, but with this, the market came up to the VWAP, went sideways, horizontal development, which you'll see a lot in the note, and then one ticked with 61 contracts there on the buy side. That was your ticket to get on board and go with the trend again. And an easy out, and we use this a lot in the room, is if buyers come in and take out that 61, and we have a specific number and all of that the wolf pack, the wolves in the wolf pack understand and use. but we can get out, which means that you can have reduced losses and higher wins. And I think Blue Collar Bubba will go over that in a little bit about how important it is just to have a little bit more wins than your losses. And the footprint chart allows us to do that in our Wolfpack room. Next.
Oh, goody. This is getting into one of my slides, Bonnie.
Your turn. Way to go.
I'd like to put in a little pitch for Andrew Stockley. If any of you know Andrew, he's a fellow that works with Trevor there at Market Delta, and Andrew has an excellent series of articles he and Trevor have put together on the initial balance trade. It's a total trading Bible unto itself. There's over 12 chapters to the book. They're all presented on the Market Delta website under the blog section, and it's just a tremendous amount of education on how to trade the initial balance. For those of you who do not know what initial balance is, it's this blue area right here. This blue area is the first hour of trading. Okay, that's your initial balance. The initial balance, first hour. This is all the trades that took place during the first hour, and they were from the level of 30 and a halves down to the 24s. We look for symmetry. Symmetry is a very important part of market profile. Market Delta shows it to us very easily. We're able to put in extension lines off that original initial balance. Those extension lines come up to here. That top of that turquoise area is my extension line. That's 2 times the initial balance. As you see, this is a very basic trade. You have the initial balance of the first hour. You come up, you start doing a little bit of business 1 tick above. You back off a little bit. We know what this back off area is. We know how to define it, because with my professional version of Market Delta, I'm able to go in and back test exactly what that wiggle room is. What's wiggle room? Well, we all know what wiggle room is. It's when we sit here in our chair and we start wiggling around because the trade is going against us. Oh my gosh, I thought this was going to break out to the upside and it's going back down, and I start wiggling around in my chair, leaning frontward, backward, forward, deciding am I going to get out. We're able to back test this because of the back testing capability. We're able to go in and see exactly what that is on a variance basis. We know how many ticks. We in turn stay with the trade. New bracket starts out. This is a new bracket. New bracket starts out where this blue box is. Pay very attention, folks, to the start of a bracket. As you see here, start of this bracket resulted in a move to the upside. Start of this bracket resulted into the move to the upside. Start of this bracket, move to the upside. This is what you call one-time framing, when you have successful moves to the upside over a period of time. Market kept one time framing to the upside. We started off this bracket, came back a couple ticks, checked out this developing point of control right here, this red line, and then continued to move on to the upside. You won't see a clean move. You will have some wiggle room in there. Being able to define that with Market Delta is a very important feature. This little trade, for example, let's say you did buy it here in this area of the 31s to the 19s. You make a move up to the 4 to 5s. That's a nice little trade from 119 to 119.04. That's 4 points. They're worth $31 a tick. That's a $125 trade. Take a ticket charge off there, and you've got yourself a nice little trade with a risk factor of this wiggle room down here. That's a 2-to-1 risk-reward type of trade. That's the 2 points of risk, 2 points of reward, 1 point of risk. That's the kind of ratios we like to have in our room. We look for trades that have that type of a pattern. If you get from, say, 31s to the 04.5s, that's 10 ticks, that's $150 on a one lot. Your risk is right down here. This is the type of trades that we like to do. We define certain types of trades, and with the help of Market Delta and Andrew Shockley's wonderful series, it's really helped me. I started working on this trade back in December when he started. It was either December, first part of January, when he came out with the series on the initial balance. I saw that this was something I could very much use as far as back testing, seeing if it is truly a profitable trade strategy, what work, look at some different alternatives. Just a wonderful series of articles. You can build a career on this one series of articles by Andrew Shockley. Be prepared. You're going to spend about 40 hours, full week, going through them all because it's very detailed, very important series of articles, but you can build an entire career, an entire profession just on this one initial balance trade. Get good at one thing, get good at one thing only. Bonnie, I'm going to save that last part on Blue Collar Bubba with the matrix until the very last because of my way my screens are set up here.
Okay, so very good.
Let's see. Here's another one we had on. This is 2 times initial balance. This is a level right here, following along the lines that Bonnie showed you just a while ago. This is another one of our trades. She was showing you the VWAP trades. This is the 2 times initial balance, our destination, so to speak. How do we know the move's over up there? How do we know it's over? That's the beauty of the footprints. This is the initial balance, 2 times IB level. It was at 122.27. This is the Treasury bond, by the way. Treasury bond's a little bit different than the Treasury note. Treasury bond is the 30-year Treasury bond. It trades in 1/32 increments as opposed to 64s. As we got up here to this 2 times IB level, first time up, 55 contracts. Hey, that's volume. That's the auction market process drying up. There's no more bidders. There's no more buyers. There's no more sellers. You go to an auction, what happens? There's very few players left at the end. Very same thing. That's why we use market profile. That's why we use the auction market process to do what we do in our room. You come up here, all the people bidding at the auction go home. They quit, 55. They go back, they get some reinforcements. They come back up with some more buyers here. Then they come back up another time, right back to this deal of returning to the top. Reason we have double tops, double bottoms, same thing that Bonnie said earlier in the day. The criminal always returns to the scene of the crime. You come up here, only 4 contracts trade that time. Does that increase your opportunity, your confidence in taking the trade? It sure does mine, especially when I see just below it these 516 sellers come in. And let's say you don't catch the top of this trade, just say you catch the 25s. You start moving it to the downside, you get a few ticks. You come in here to the 22s, that's 3 ticks times 30, because this is $30 a contract, actually $31, a little bit over 31. That's a $90 trade just on that little 1133 to 1155 time sequence right in there, and you have a very short-term capture. This is why I like to work for blue-collar wages. This is why I like to sit in front of my screen, observe, and just wait for these setups. When do we all get in trouble? We get in trouble because we try to invent trades, make something out of nothing because, by gosh, I'm ready to trade right now. I've been there. I've done that too. I'm ready to trade. I want to put on trade. What's it going to do? Patience. Just be patiently waiting for these setups. They will come to you. They will be clearly shown. We don't have to get it perfect. That's the thing. We don't have to get it perfect. This is a Treasury bond trade that actually was what I'm talking about, the patient initial balance trader. Just be patient. This is an area right here where we got the move to the upside. Came in with a fairly narrow range, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 ticks on the initial balance. We move on up. We get 2 times IB. This particular trade went on up to 3 times IB. Took out the previous day's high. Always look for in Treasury notes and bonds previous day's high. They really like those. They like to use them as destinations. Again, the initial balance trade. This is a trade from 6-7. This is 6-8. Gosh, that's today, isn't it? Okay. We had this trade set up. This is the market profile distribution. It's not split. Fairly well, good distribution, market profile distribution. Here's the IB high right here. This is the IB high, the first hour. This is the point of control. This is our move up to 2 times IB. Now, the nice thing about market profile is market delta, we can split this out. We can look at the individual trade, and let's do that right now. Let's take a little bit of time, show you how we use this in our room, how I've been using this trading with Trevor for, gosh, well over 6 years. These are
Before you move to the next slide, I just want to point one quick thing out, because a lot of traders that trade profile, and we've been trading in our room profile for in excess of 6 years, you see this 2 B formations on this, and often that is considered in many profile rooms as a weak market. So with that said, this is not necessarily a weak market, and I'll let Don get to his next slide.
Excellent point, Bonnie. Many times people think that B patterns and P patterns, you know, those are good probabilities. We beg to differ with them on that. Now let's take this and unsplit this. Let's split this out and let's look at these individual patterns on this particular one. This is a footprints chart. This is the very same thing that happened today. How many of you are familiar with the Treasury note auctions, Treasury bond auctions? Right now this week we're having Treasury is refunding. They're selling some more paper out to the various dealers and to the professional investors and individuals, and they're making those Treasury notes, bonds available. They come out on Tuesday, Wednesday, Thursday. The auction results are published at 12 o'clock noon Central Standard Time, 1 o'clock Eastern Standard Time. Okay, today, this is a trade that we had in our room today. 10-year Treasury note auction results are announced right here at 12 o'clock Central Standard Time. What happens? News comes out on the bid to coverage ratio, the interest rate, how many notes were purchased. It was a 10-year note auction, by the way. Yesterday was a 3-year. Tomorrow we're going to have a 30-year bond auction. That ought to be very interesting. This is the bond that we're looking at right now. These are 5-minute bar charts. 5-minute bar charts. This is the professional version too, by the way, of market delta. Reason you know that is because it shows the responsive selling, it shows the initiative buying, it shows the initiative buying, shows each one of these 5-minute bars what the selling is in each 5-minute bar. You see the market come down on the news, and then something happens. We stop. We stop right there at 115.13s. 115.13s. Let's go back to that prior chart. 125.13s. Gosh, we're down here in this area, aren't we? This was the Globex session. This was the high volume of Globex session. Trevor, in one of his articles, always talks about looking for support at previous areas of high volume. Very important. Read that article he's got. It's got a very good article in there. Very simple, very easy to understand. Supportive there at 125.13s. We come down. How do we know it's supportive? Notice what happens down here. We have a dry up of volume again. We look for 10% for 3 tick levels. Give you a little something to hang your hat on there. If I see 1,200, 1,300 contracts here at this level, and then 2 ticks below I see less than 10% of the level here in total volume, that's what I need. That's what I'm looking for. 10% or more deceleration in volume. Remember that. It'll help you use these footprints much, much better. Then we come up in the next 5-minute bracket. What happens? Horizontal development. Inside. You ever heard of inside bars? Sure. You know what inside bars are. We all do. That's range contraction. What happens out of range contraction? Range expansion. Here come the buyers back in. Buyers start coming back in here. Buyers, that's 888. Got some good buyers right in there. We come back up. Oh, by the way, this is the initial balance, first hour of regular trading hours, pit session high. We've not yet broken out substantially to the upside and been able to extend the range. Folks, remember this. If you can't extend the initial balance range, most likely you will drop back into it and balance inside of it. If you can extend the IB range, if you can extend it, then look for symmetry. Look for symmetry up at 2 times initial balance. That series of articles by Market Delta very much get into the probabilities that you'll have of reaching this 2 times initial balance. I'm not going to tell you what it is. I'd suggest you get a trial subscription from Trevor and you start working with that stuff. It'll help you get that information and get it into your arsenal of trading ideas. We come up here, we get to the initial balance first hour, and look what happens. 589 buyers, 1,590 buyers, 1104, and we have 2,418 positive delta. We have 883 positive right here in this 5-minute bar. We increased to 2,400. Increasing volume to the upside suggests what? Well, we go horizontal, and then guess what? More buyers come in, and we move up to the symmetry. We get right to the tick to 126.01's our destination, our target of 2 times initial balance. That's 2 times the initial balance of the first hour. We get up there. Guess what happens? 22 contracts trade. Gee, what do you think's going to happen here? You were long? You think you're going to get out of this trade at that level? I would suggest you do if you get up here and you see 2,200 contracts trade, 1,600 contracts trade, and then only 22, and it's right at the destination. You better be exiting this trade, folks, at 125.31, 126s. First time up. That's a nice little trade here. This little trade from 24s on, you don't have to catch the bottom tick. From 24s, just catch the breakout, get it confirmed with volume. It's also a news event driven trade, so you've got some momentum going behind you. That little trade up to 126s, that's good for 7 ticks. 7 ticks times 30, you're talking about $210 on a one lot in a very short-term period of time. Don't try to invent trades. Try to get in there and get the good trades and wait for them in patience. That concludes our slide presentation. I'm going to do one other little thing for us here. Bonnie, you got anything to add there?
Yeah, we'll go back to that last slide because it has some information that we'll first do this, which is a really important, extremely important exercise that I think all traders forget about. So I'll let you do that. We've had some great questions asked by some of the members in the room, and we'll get to that and what we'll be doing next week. So go ahead with this, Don.
I'm Blue Collar Bubba, by the way. I'm the guy that shows up with my lunch pail, sits down at my workbench, and just keeps grinding out trades day after day after day, putting together the same transmission, the same car, the same whatever motorcycle on the Harley-Davidson assembly line. I just keep doing the same thing over and over each day. I don't consider myself to be I'm just a blue-collar trader. I don't consider myself to be any more than that. I just come in, grind out the trades. Let's take a look at one tick value of 15.625. Okay, this is a hypothetical illustration. Let's say you do a total number of trades in a day of 5 in the Treasury note and the bond. You don't have to get it perfect, folks. You got a winning trades of 3, you screw up and mess up, and you have 2 losers. Okay? If you keep your average tick win to say be 6 ticks, your average tick loss to be 5. This isn't much of an edge. It's just a small edge. Okay? You have 60% winning trades. You have your winners be just a little bit bigger than your losers. At the end of the trading day, you've got $125 gross profit that you've achieved. Take off $16.25 because of those low ticket charges that Bonnie talked to you about in the note and the bond versus the ES or crude oil or any other instrument, and you net out $100 a day. Now, this doesn't seem like much, but just follow through with me here. Weekly paycheck, you wind up with $543. Your monthly paycheck for Blue Collar Bubba comes in to be a couple $1,000s. That's equivalent to approximately on a 30-hour work week, $18 per hour. Now let's look at some other numbers here. Let's suppose that you're able to do one more extra trade and you get 6 trades, okay, and 4 of those are winners, okay, 2 of those are losers. You keep the same win-loss ratio, and all of a sudden look what happens. Your monthly paycheck goes from $2,000 up to over $3,000. Now let's suppose you have a problem in that you have an average tick loss that's like 8, and you have an average tick win that's only 5. What happens to you? You wound up with not too good of a deal. You're real good on your percentages here, but because your average loser is bigger than your average winner, you all know this game, but put it on a matrix, build your little spreadsheet like this, and you'll start understanding that at the end of the week, let's say I sometimes will do up to 20, 25 trades a day. Let's just use an example on here, 15, okay? Well, let's use what I commonly do. I play golf, so I try to go for 18 holes. 9 trades in the morning, 9 holes in the morning, 9 holes in the afternoon. Let's suppose you're able to get 10 of those to be winners, 8 of them be bogeys, 10 of them be birdies. You got an average tick win of 6, you got an average tick loss of 5, and this is a one lot, folks. This is a one lot. A lot of trades over the course of the day. Round-trip ticket cost, $58, $254 net. At the end of the month, Blue Collar Bubba theoretically has a $5,000 month. Now, let's drop this back to say something like 7, 4. Keep this at 6 and 5. You're down here. There's another way to, more than one way to skin the cat. You know what that would be. Instead of just trading a 1 lot, go to a 2 lot. You only have to have your winners be a little bit bigger than your losers, and you only have to have a few more winners than your losers. Do not try to make this a game of perfect. That's where most of the traders fail. That's where they have the problem. They wind up doing what? They eat like a bird and they poop like an elephant. Remember, keep control of your loser trades. You'll do just fine, especially if you've got market delta. You take a systematic group of trades. You keep doing them day after day after day, like we do in our Wolf Den room.
Take care of the pennies and the dollars will follow, huh, Don?
Correct.
That's very good. I know there was an awful lot of information that was given today, and if you like hearing about the Treasury note and the 30-year bond, let Trevor know. That's a big part of our trading room, mainly because we can get in there early, get our work done, and be done by the time Europe closes is often our game plan. With that said, Don, if you could, while I'm talking, put up the last slide.
I can't, Bonnie. I can't get back to it. I've already, okay.
Oh, you can't go to the last slide?
Yeah, just, do you remember what your point was?
Well, yeah. I just wanted to, number one, thank everybody for attending our webinar. And if you are here in the room today, you are officially allowed to come to our room and see us trade for a 1-week trial membership. Now, we can't bring back that slide. Maybe, Don, you could just type it on there just so people can...
Wait a minute. I got it here. Wait a minute.
Just go to the very last. As he's getting to that. Yeah, all the way through.
That one?
All the way to the very last one. It looks like the first one, actually.
That
and then
one?
we're going to, yeah. And then we're going to, no, the next one, all the way. One more.
There's no more after this.
I think there's one more. There you go.
Okay.
Perfect. Yeah, let's just hold on that while we answer some questions. For all of those, the presentation is done. If you want to wait to hear some of the answers to the questions, stick around. But those that want to go, please, if you want to sign up for the 1-week free trial, please go to our website, http://globextrading24-5.com, and there you'll see a orange banner specifically for Market Delta users to click in there to get your free trial. Now, just underneath that is admin@globextrading24-5.com, and if you have any specific questions you would like to ask us, then go ahead and copy that down so you can get us your questions if we, for some reason, didn't get to it today. Before we answer any questions, I know we went through quite a bit today, but Don, do you want to give them a little bit of a heads up as to what we might be doing next week, and then we'll go into the questions.
Next week, well, basically we show up to trade. We'll be going over initial balance trades. VWAP trades are 2 of the trades that we do, and that's basically it. We just show up each morning, 7 o'clock, clock in, bring my lunch bucket, and a moderator makes sure that there's always a moderator on at the start of each 30-minute bracket. We talk about the market. We talk about trader education. Most important is we try to give trade setups as they occur, give you some thinking about, okay, here we're coming into our VWAP. Tell the wife you can't take the trash out right now.
Or the husband.
Yeah, or the husband.
and next week we're going to be talking about crude oil and the E-mini. We're going to talk to you a little bit about how we actually trade crude with the E-mini and how that gives us a little bit of an edge. So when we say that we are a wolf pack, we say that because the strength of the pack is in the wolf and the strength of the wolves is in the pack. And we have found that as we band together, we can watch multiple markets. So next week we're going to show you how we watch some of these other markets and trade them. We do offer, as of recent, we have opened our Wolf Den up to other students. That's why you're going to get a free trial just to see what we're doing. But just understand that we're really a professional trading room. All the traders in the room trade for their income. We don't really do, in fact, there is no chatty, insignificant information. It's not part of our room style. So if you come into the room next week, please honor that. We stick to business when we're doing business. I'm going to get to some questions, Don, unless you want to add anything.
One thing I'd like to add is that Treasury Note and the financials, the note and the bond, open up at 7:20 in the morning. We kind of roll from there over to 8 o'clock when the crude oil opens up. This morning we had a very nice crude oil trade. If you have market delta, if you have any type of charting package, start yourself up with a VWAP that starts right out at the start of business today. Market delta's VWAP started out right there. I called out a rising VWAP. It was after about 3, 4, 5 minutes, and I said this is supportive right here. It was at the 50-cent level. We quickly moved up to the 75-cent level on up to $1, and I got real excited and took my little profit right there, and gosh, I was real proud of myself. I got a 50-cent move in crude oil. That trade went ahead and ran on up for a full $1, $1.50, and that trade right out of the opening box at the end of a half hour had over $1,000, $1,500 in it just on a one contract. Now, be careful with crude oil, folks. They've raised the margins on it. It is a little bit more volatile, and you are playing with a bigger risk-reward trading instrument. Okay, but that was the trade we had right off VWAP, a rising VWAP. We were supportive above it. Worked very well with our market delta setup. We also had a dry up of volume on the downside there too. From 8 o'clock crude oil opening, we roll right into the 8:30 for the ES opening. It's the last, so usually we have a pretty good chance to get some start to the day. By the time ES rolls around, you know, we're seasoned traders. We've been up and trading for over an hour. So if you like to get up early, we might be something you want to give some consideration to. Got any questions, Bonnie?
I do, Don. I certainly do. Okay. One question. One time framing. This is a question by Jim. Is it like point and figure? You want to take that one?
Why don't you? You're well familiar with one time framing, 30-minute brackets.
Yeah, one time framing is it like point and figure? It is. I'm familiar with point and figure quite a bit. I've got some Dorsey Wright knowledge. But with that said, one time framing is not really like point and figure. It has a completely different. The rules are based on 30-minute brackets, where point and figure is not. Another question from Doris. Doris has several questions. One is, do the methods work with the 30-year bond?
I'll answer that.
All right.
I gave some good examples, Doris, as you see in there, of the 30-year bond futures, and yes, very much so. In fact, I think the 30-year is maybe a little bit better than the 10-year Treasury note. At least from my standpoint, I really like to trade that 30-year bond. The methods work just as well, if not better, I think, in the 30-year bond than they do in the note. And I trade them both. And I trade them both together. I got charts set up on both of them.
And that kind of ties in with Tom's question, where he asked about the 10-year, 5-year, and 30-year liquidity. And I can clearly tell you that from a liquidity standpoint, the 10-year is by far much more liquid. From a technical standpoint, Don would tell you that the 30-year is extremely technical. The 5, I haven't really taken much look at the 5. How about you, Don?
The 5-year, there just isn't the volume in it that there is in the 10-year. The 10-year is the benchmark. Go with the 10-year, folks, to get started. Once you get good with the 10-year, you have the right to move on to the 30-year, which gives you a little bit more bang for your bucks.
Okay. Mike asked about the site. It's sitting right there. There was a question here, what do you call that entry? I'm not sure. I think you were calling it the deceleration entry, but with that, I'll say that we in the room focus on 7 trades, and we do have some training videos within our website that are blocked for just our members, but we do focus on 7 trades, and we consider new students to just work with one trade at a time and get to learn that one very well.
Which goes back to Dan's question about Andrew Stockley's work on the understanding the initial balance trade. I would encourage you to read through, if you're going to come into our room for the free trial, starting, say, gosh, I don't know whenever we get you signed up, but say you're in there next week, might spend some time over the weekend reading about the initial balance trade. We'll be having a few initial balance trades, as we will some other trades, and it isn't necessary to really totally understand it. It's like any other trade, you know, you get good at it over time. Another thing you see, I'd like to point out too, before I answer one more question here, is what you see, these charts that we've put together. This is my homework that I've been doing every day for the last 10 years. I do approximately 3, 4, 5 of these each and every day. I feel like that if I do this verbalization, this narrative writing down, and I will better understand it. It'll be easier if I mess up the trade for my right brain to process that pattern recognition the next time around and get those brain connections that will recognize it with my right brain pattern recognition. So that's why I do this. That's why I continue to do my homework. A good teacher is always a student. I always consider myself to be a student of the market. We had another question about the data feed. The data feed that we use is the Zenfire data feed that integrates very well with the market delta that I use, and it just works very nice. Very great data feed. If you get it through certain brokerage firms, it's free. DTN has a very good data feed also too. I used that for a considerable number of years, and gosh, Dan, you can, you know, free data feed, that's a pretty nice little feature. I know that when I'm my trade station, I got to pay for it. So there's some nice basics to what we've got here available with Market Delta.
I'll go on with another. We'll do one or two more questions. There are a lot of questions on the note and the bond, and I have captured them. And maybe with these questions we can develop another webinar for Trevor and Market Delta just on the notes and the bonds and the financials, because they are a nice instrument to trade, and they're not, even during, another reason is during earnings season, they're not as volatile. They have, you're not subjected to that kind of movement because of the earnings reports. Doris asks, deceleration rules, does it change between regular trading hours in Globex? And the answer, I'll do this one, Don, give you a break, is no. The deceleration rules pretty much remain the same because you're looking at a percentage, and an easy percentage for us is 10%. It's just easy for us to watch for. And so so during your Globex session, 10% of a lesser number is a smaller number. So during regular trading hours, when we have a lot of liquidity in the market, then it's a larger number. I think that's about it.
Two quick answers, Bonnie. Okay. Yes, this webinar is recorded for later viewing. Trevor will have it on his website. And another question that was asked that I wanted to, yes, you can go to the CBOT and Chicago Mercantile Exchange. The leading, which Treasury is leading? Is it the 30-year leading the others? 30-year leads on the way up. Treasury Note leads on the way down. Okay, and
maybe Trevor before the end can actually post the link for Andrew Stockley's IB information, because we did have a question on that too. If you do sign up for our room, please be patient with us. We'll get you in as soon as possible, and like I said, it's for a week in our room, and you're welcome to join us.
Mike, one last thing. Yes, we do provide chart definitions. If we join your room, make sure you get that more expensive one, because that's one we've got, and we've got some language built into ours, and so you kind of need to have the more expensive one. I know Trevor wanted us to say that.
No, I didn't put him up to that. Okay, so I've posted a bunch of links here in the chat for most everybody. I'm posting right now the one that is the links to all the articles on the initial balance and everything that they've been talking about from Andrew. Actually, it links over to our RTL tutorial. If you scroll down on that page, you'll see a case study start to finish, parts 1 through 12. There is a lot of material in there. That material, I hope I'm not putting words in Don and Bonnie's mouth here, but that material, it's important to obviously learn if you're going to be doing that stuff. It's not a prereq. I don't think it's a prereq for their room. You don't have to necessarily know all that, but it is great. It's a great resource for learning. Let's see what else. You guys got their website. The link, here's the link to register for next week's webinar if you haven't, which these guys will be presenting that again. So that link is also on our blog, so you can always hit that at our blog if need be. So I think you got everything you need. Of course, you can get a free trial Market Delta. The free trial, it's a 30-day trial, and it's of the top version, the Pro Complete Edition. So you have everything you need there if you currently don't have that. And he mentioned, I guess if you end up subscribing to Market Delta, you would need the Professional to use all their charts. However, the Standard Plus Market Profile would get you the market profile and the footprint, most of this stuff. So I just want to make that clear. With that said, I think that's it. This was recorded. You'll get a link tomorrow in the email. There'll be a link to download this, and you can watch it at your convenience. Thanks, everybody, and we hope to see you next week.